All right, welcome back to the channel. Today I'm gonna do my monthly portfolio update, and I'm just gonna post it to YouTube. So I usually do this on the Discord and just post a monthly kind of update of kind of what I've done with positions over the last month, and it's mostly just for me to keep track and kind of keep myself accountable and whatnot. So going over current allocation, I kind of break it into index/individual stocks. So my goal was to have about maybe probably only 15% individual stocks, but they've grown beyond that. So kind of just keeping with what I've had there. Index funds, we can see about 49% is in VTI, 8% is in SPY, and 43% in SCHD. The only reason I have SPY instead of VTI is because I do not have access to a total market fund, total US stock market fund in my 401k, so that is why that is split up like that. So basically in my overall index fund, I just kind of try to do total US stock market and then kind of a total, well, not total, but the Schwab Dividend 100 Growth index, because I like that index. So yeah, I used to have BLV as a long-term play on rates, but rates going down, but I think I have other exposure within the portfolio that would benefit from that. And I didn't want to be exposed to bonds long-term. So I sold that for a bit of a gain and kind of rebalanced it into VTI and SCHD. So index right now, you can see indexes are about 68.3% of the portfolio. Large caps are 15.75, mid caps are 2.82, small caps are 1.27, and we got about 4.35% in REITs and about 7.5% in cash. So total portfolio wise, VTI is about 33.46, SCHD is 29.36, USD is about 7.5, Meta is about 5.58, SPY is 5.45%, Amazon 3.31%, Google 3.14%, KRC 2.6%, and yeah, on and on. So getting into the individual stocks, how I'm looking at my individual stocks right now is basically where I want to be overweighted in the SPY. So like Meta would be an example where when it went down and down and down and down and down, went into my buy zones. Sorry for the dogs. I wanted to get overweight essentially my portfolio into Meta compared to just the SPY allocation or the VTI allocation. So I started accumulating Meta, and it went to my buy zone at 150, went to the very bearish buy zone at 125, and then it went even further down to like 88, which was crazy. So I built that out pretty large, and I recently trimmed it back. At one point, I think it was like 45% of my individual stocks. So we're 10-11% of the total portfolio. Trimmed that back, kind of regretting it now, because I think that, I'm getting in the mindset of like I want to let my winners run. So I kind of regret that, but I'm really happy with the position now at the price now. I'm not going to be adding to it. I'm pretty happy with the allocation. Amazon and Google, added a little bit to those this last month, but most of my position was built out towards the beginning of the year. Cost bases in the 90s on both of them. So I would like to build out those more, but they would have to get further down into my buy ranges before I allocate capital there. KRC, 10.8% position in individual stocks, but if we look at the total portfolio, it's about 2.6. So it's reasonable total portfolio in my mind. And yeah, we'll see if that one turns out. If it doesn't, I'm fine taking that L if I need to. And then IIPR is about 4.9% of the individual portfolio, 1.18% of the total portfolio. KRC and IIPR, I'm at the point where I'm probably just going to be reinvesting dividends as long as I think they are, reasonably priced. I probably have built these out to the size that I want, and I'm happy there. So Dropbox, I think it did take a little bit off actually when it ran. So cut that probably I think I cut the position by about 20%, but I still have a decent allocation to Dropbox, 1.18% of the total portfolio, or 4.9% of individual stocks. ANET, I added 2 more. So Dropbox, I am pretty happy with my position sizing. I don't plan on adding any more to it. ANET, on the other hand, if it got a significant pullback, I could see myself building this out into a nice large core position. So, I'm open to that. It's been running a lot lately. I think I started my buys at about my first buy was like 120. Then I took on a bit more at 130 something, and recently bought even more at all-time highs. So slowly building that one out, and if it can pull back into more of a decent buy zone, maybe like 130, 120, I could see myself building that more. Just have to be very careful about the cyclicality of that industry, and when you kind of accumulate it. So I'm being cautious there. Cigna, CI, 3.9%. Just bought a little bit more today, I think. So, and this is another one that I would not mind adding to if it continued to drop. Kind of took my starter position in that base case range of, 240, 250. And if it can get to the 200 to 220 area, I can see myself building that up a decent amount. GPN, I'm pretty happy with it. I think I'm flat on it. Gains wise, pretty flat. KRC and IIPR, I'm down on 18% KRC, 14% IIPR, something like that. But GPN, I'm pretty happy with. Don't really have any plans to add to it large. Similar to FIS, Fidelity Information Services. MUSA, I actually could see myself building this out a bit more. So I'm kind of looking for, if this gets a pullback and gives me opportunity to build that a bit more, I could see that going to maybe a 5-6% allocation, depending on the opportunity. Let's see, iRobot acquisition play, pretty happy with that, not gonna touch it. Triple M, 3M at 2.5%, so I rebought into my position. I had bought like low 100s, sold at 130, and then I rebought around 99. I don't know if this is gonna stay in. I don't know if this is gonna stay in the portfolio. Just because there's a lot of uncertainty around the lawsuits and the Forever Chemicals stuff going on. Like it could be really good, because if things switch and sentiment switches, lawsuits get settled or whatever, and they're not as bad as the market thought they'd be, we could see a pretty quick reversion on 3M. But I don't know. BDN is another REIT that is on the more speculative side, and they are a little bit more levered. Basically, they would probably have a larger upside if, overall REITs turn around, the sector reverts, and we kind of see interest rates coming down, seeing some tailwinds. BDN is one of those that if they don't have to divest a lot of their good assets, they could see a decent move. So I've got small exposure there. Digital Bridge, pretty happy with that position. I could see myself maybe building it out a little bit more. And Tyson is one I also could potentially see myself building out a little bit more. But I'm still kind of on the fence on Tyson of if I want to make it a large holding or not. Kind of similar to 3M, but Tyson, my point was always around $55 if my point of interest. So if it gets back down in the 40s, I could see myself, maybe looking at accumulating a little bit more. But I'm trying to also keep this portfolio on the individual side a little bit concentrated. I want to have my main plays, long-term plays that I'm confident in. And a lot of times these smaller ones that you have like maybe small conviction in, at least for me, I find that they distract me a little bit more than anything. So the other one that I'm looking at is ARE, and I took just kind of like a starter watcher position in that, and that's Alexandria Realty. And so if that one gets into my buy zones, I could see myself accumulating a little bit more of that, and building out the REIT section, the REIT allocation a little bit more, getting that up to say 5% or so. So yeah, that is it for the end of May portfolio update. Hope you guys are having a great day, and we'll catch you later.